Good morning, friends, and thank you for joining me. This is Vijay Bhambwani here. I welcome you to Equitymaster's live stream on Bullion today. I hope you can all hear me, and if somebody can simply type a message that the audio is clear, I can begin. All right, I've got a confirmation that the audio is clear. We can now begin. So, friends, I started recommending Bullion for Equitymaster in the middle of 2019. I'm talking of calendar year 2019 and not the financial year. I based my recommendation on Bullion based on certain parameters. And as Warren Buffett says, you basically stay invested in any investment of any type, whether it's a bond, it's an equity share, it's bullion, it's a derivative, or whatever it is, as long as the reason for entering that investment is still valid. Now, according to me, the game plan that I had in mind before recommending investing in bullion is still in existence. I don't see any reason whatsoever in deviating from the path, and which is why I would say that the original game plan of allocating, see, if you were to allocate 100 rupees to bullion, for example, depending on your risk appetite, 60 to 70%, if you're a little more risky minded, you can invest 60% in gold. If you're able to take lesser of a risk, then 70% in gold and the remaining in silver. Now, that logic is still in existence. I do admit that the euphoria that you saw last year in July, August, and probably up to September seems to have eased off a little, and people are having concerns that the up move in bullion may be under threat. Now, there are a variety of theories that are going around in the social media and the mainstream media, and fears being expressed is that bullion will be replaced by cryptocurrencies or digital money. Inflation may not really rise as much because the money printing program this time around is something that the world is anticipating. There are fears of stagflation, there are fears of deflation, etc., etc., and therefore people are concerned. Let me just tell you that these worries invariably occur in investors after they commit money to a particular investment and they see it go down. You basically begin to have self-doubts, which is also normal. And this is particularly so in the case of investors who have just joined the investment bandwagon. Now, if you're a veteran investor, you will understand immediately what I am saying. See, first of all, when I say something in these videos or on my own social media accounts or in the newsletters that you would receive as a Equitymaster subscriber, please understand that my perspective may be slightly different as compared to what you are used to seeing in the public domain. Of course, I have registered with SEBI as a research analyst, and to that extent, I am a research analyst, technically speaking and officially speaking. But first, foremost, and always, I am the founder, promoter, and CEO of a limited company. And when I say something, it is from the point of view of what I would do as the guy running the company with shareholders' money that is lying in the company's account, and that needs to be deployed in the market, which is where there is a slight pull and push between what you are hearing in the public domain and what you're hearing from me. I talk from a doer of deeds perspective, and I do admit that there are times I also go wrong. I'm human after all. But when I go wrong, please understand that I have egg on my face, losses in my books, and a very, very sore nose, because the market hits you in the nose. And therefore, one needs to be extra careful, because one knows that as a doer of deeds, when you go wrong, there are penalties in the form of market losses, which is why my view tends to be a lot more cautious and also a lot more stable over a period of time. So the reasons that I gave out in gold, and I'm going to do a health check of all the reasons that I stated in 2019, and whether those reasons are still valid. I'll hold your hand and walk you through each and every reason. Unfortunately, YouTube does not allow screen sharing. I had made a PowerPoint presentation to share with my viewers today who are joining me in the chat, but this is the first time we are doing a live show. So we didn't know that YouTube does not allow screen share. However, I will verbally take you through all the slides that I have made for that PPT, and you will see that from the longer term perspective, the bull market in bullion remains intact. My number one assumption was that inflation will go up. Now remember, we are talking of middle of 2019. All this brouhaha about COVID, etc., was not existing then. And in the health check, we will basically take a look at this aspect also. Number two, I was of the opinion that over a period of time, fiat currency, which means paper money, the currency notes that you carry in your wallet, are going to lose their purchasing power over a period of time, because the world is at a state of currency wars officially. If you Google search this currency wars, officially speaking, the world is in a state of currency wars from September 2012. Countries are basically devaluing their currencies in order to achieve higher exports. And this system is also known as beggar thy neighbor. You basically devalue your currency faster than your neighbor so as to grab his or her market share in the export market. So over a period of time, paper currency is expected to lose its purchasing power, which is good for bullion. Number three, I said that over a period of time, the food inflation will get even more aggressive. It will escalate and create problems for mankind. Number five, silver in this case particularly will gain because of the fact that it is not just a store of value, and it is not just a precious metal, but it is also finding industrial applications, and therefore Internet of Things, 5G telephony, electric vehicles, solar power, all cannot be made possible without the use of silver. Which is why I said you should allocate 30 to 40% of your bullion portfolio to silver rather than putting it all in gold. Now, we'll do a health check of where we are at this point in time, and whether those reasons which I specified in 2019 still exist, and what should you do with your bullion. Number one, the erosion of currencies' buying power. If you were to basically Google search Bianco research, I'm sorry, I think the screen seems to be flickering a lot. Okay. Now, if you were to actually Google search Bianco research, BIANCO, Bianco research, you will find that the erosion in the US dollar's purchasing power is so significant that it is at a multi-decade low. Secondly, the share of the US dollar as a global reserve currency has fallen to its lowest after 1995. Now, this steady erosion is basically started off from 2017 onwards. The US dollar is basically steadily losing its primary reserve currency status majority to A, the euro, B, the Chinese renminbi, and C, the Japanese yen. And of course, the British pound sterling also remains. So, as and when the dollar loses its reserve value, it will lose its grip over determination of commodity prices, for the simple reason that the dollar is the global invoicing currency in the commodity markets. So when you buy and sell commodities, you receive and make payments in the US dollar. So if the dollar is strong, the commodity prices fall, and if the dollar is weak, the commodity prices rise. It's like a seesaw which children play in a garden. So if the heavier child sits there, it lifts the lighter child up on the seesaw. Now, as the dollar loses more and more of its reserve percentage in the global currency basket, you will see that gold and silver will see defensive buying. Number two, if you go to the Food and Agricultural Organization, the hyperlink to this organization is FAO.org, Food and Agricultural Organization.org, abbreviated. Now, this is a body which is promoted by the United Nations organization. You cannot have any other authority which is as credible, as reliable than the United Nations. Now, if you go to their website or simply Google search food inflation as per FAO.org, you will be shocked. You will be shocked because the food inflation is now at its highest after July 2014. And if you ask your parents, grandparents, etc., you will realize that whenever there is inflation, gold prices and silver prices by default and by extension have risen. So higher inflation scenario is basically good for bullion. Number three, if you go to Bloomberg.com or even search the string Bloomberg.com water scarcity, and I keep posting all this on my social media accounts, so my friends who are connected with me get updates on a day-to-day basis. And 3 or 4 days ago, believe me, I was genuinely very upset when I put up this hyperlink that the United Nations organization again has said that within 4 calendar years, 48 months, 50% of humanity will be living in water-stressed countries, which means half the countries in the world will have some amount of clean drinking water shortage or one kind of the other. You don't need to be an agricultural scientist to know that without clean, good, potable water, you cannot cultivate food, which means your food inflation is likely to go up. Now, I remember in the 8th or 9th standard in my school, I forget which particular year, but I'm definitely remembering that it was a school economics project. We were taught back then in the 1970s and 80s that inflation is bad, it makes people miserable. But the worst kind of inflation is food inflation, because food is something that you cannot live without. And if food starts to get more and more expensive, then people will buy less and less of other commodities. So given a choice between buying a pair of shoes or a mobile phone on one hand, or putting food on the table for your family, it's actually a no-brainer for me. I would rather put food on the table for my family than buy toys like mobile phones and luxury items like footwear. Compared to food, everything else is a luxury. So if food is going to get more expensive, everything else will see lower sales. And believe me, like I told you, our elder generation, our forefathers have taught us that whenever inflation goes up, gold is bound to go up. And by default, silver. The other thing, the currency factor. Last week, you would have realized that the USD INR suddenly gave a big spike. It rose by almost 1.25% in one trading session, which means that this kind of intraday volatility was roughly 4, if not 5 times more than on an average trading day. Why did this happen? Now, if you were to ask a veteran who basically trades currencies or knows something about currencies, is either an importer or an exporter, he or she will tell you that the LPA, or the long period average of the rupee depreciation versus the United States dollar, is between 3.5% to 5%. Every year, the rupee on an average, I'm talking of long period average from independence 1947 onwards. So when the currency depreciates against the dollar, when the rupee depreciates against the dollar, whatever we import becomes more expensive. And 2/3 of all our imports are fossil fuels, or crude oil and natural gas. And these oil and gas is basically, these are multiplier commodities. As and when oil and gas price goes up, immediately you will realize your auto rickshaw, your taxi fare, your bus fare, your milk, your eggs, your meats, your green vegetables, fruits, grains, pulses, cereals, etc. all get expensive. Here again, so when the currency depreciates by 3.5% to 5% a year, imported inflation, this is called imported inflation by economists, imported inflation goes up. Now, does it mean that the long period average of 3.5% to 5% means that the rupee will depreciate against the dollar every year between 3.5% to 5%? No, that doesn't happen. There are years in which the rupee actually strengthens against the dollar, and there are years when it is flat against the dollar. But there is something that statisticians call mean reversion. In the following years, the rupee depreciates by double or triple the amount to revert back to the mean, and therefore inflation comes back in the game. So that 3.5% to 5% depreciation per annum is again achieved. Now, all through 2020, calendar year 2020, if you check the chart of USD INR, you will realize that the USD INR was falling. If the USD INR was falling, that means the rupee was getting stronger and stronger against the dollar, which is why gold and silver are now falling in the Indian commodity exchanges. Is there going to be a mean reversion? I think so, yes. 2021 is the mean reversion year for currency. I can see that Mr. Ronak Patel has written about the range for the USD INR in calendar year 2021. Ronak, I think the USD INR has a support, give or take a little bit here and there, at around 71 levels. And if you take the period of December 2021 as calendar year 2021, I think the possibility of 76 or 77 on the USD INR cannot be ruled out. Now, if that is the case, what you saw last week when the USD INR jumped by 1.25%, you saw that gold was falling in the international market, but on the MCX, gold was rising. Why? Because the USD INR had appreciated 1.25%. So when the USD INR starts jumping to catch up for the lagging in 2020, even if gold prices do not rise in the international markets, they have the potential to rise in the Indian markets. Part of the rally you have already seen in the last 2 or 3 trading sessions when gold and silver have gone up. Please give me a second. So, Reuters, another international major news agency, has given out the information that Indian gold imports jumped 4-fold in the month of February. Now, why did this happen? Why is it that suddenly Indians decided that their love for gold has multiplied? And is this a reason why gold and silver are showing signs of stability? I write a weekly column on CNBC TV 18's Commodity Corner. And since the last 2 weeks, I've been writing in my weekly column that I am seeing early signs of bullion slowing down its decline. Remember, I'm saying slowing down in decline, not rallying. So the declines are getting slower and slower. This could be the early sign of a bottom being formed and a rally starting from here on. Now, the Bloomberg Quint and the Reuters report that more than 400% jump was seen in India's gold imports recently is another confirmation of bullishness in gold and silver. Why is this happening? Because interest rates are going to go down, and that is a perception of the market. Is this perception based on fear, or is there any concrete evidence to it? Now, when I connect with my friends on my social media accounts, I talk a lot about the bond market, and believe me, a lot of people get put off. Vijay, you're talking about bonds. They're extremely boring. There's no volatility. There's no movement. And nobody wants to really care about bonds. I'll tell you what. I think the bond markets are the fountain of all money supply. And whether you like it or not, bond markets impact other asset classes, including equities, including currencies, and even foreign exchange. Now, the government of India has announced that it will raise 12 lakh crores from the bond market in India in FY, financial year 2021 to 22, which is 1st April 2021 to 31st March 2022. Now, the bond market, ever since it has heard that 12 lakh crores will be required, has started marking up the yields. That means bond prices are falling and the yields are rising. This is the bond market's way of saying that we want higher interest rates if at all you want more money from us. But the government of India is intent on keeping interest rates lower so that it can borrow money at a more affordable rate. Now, you would have all seen how recently the small savings interest rates were proposed to be lowered sharply, to the extent that Public Provident Fund, or PPF, which is the EEE, exempt category ATC investment. When you invest money, it is tax exempt. When you get interest on it, it is tax exempt. And when you receive it on redemption, it is tax exempt, which is why it is called EEE. PPF interest was to be hammered down to 46-year lows. Now, it is because there are elections going on in West Bengal, and West Bengal contributes 15% of the national contribution in small saving schemes. that this interest cut was postponed. The market feels that this interest cut is going to come after the elections are over. So when your interest rate is going to go down, don't think everybody is going to rush into equity markets to put that money there. Yes, there will be people who will go and put this money in equity markets so that they can have a better, comfortable lifestyle, because their interest rates on which they are dependent for a livelihood are falling. But remember that equity shares are riskier, and it is not necessary that you always make a profit in your investments. Therefore, there will be some flight to safety, and this is what the Indian market did. They suddenly grew a very huge appetite for gold and started buying, which is why the imports went up over 400% in gold. So number one, you have breeding ground for inflation. If you check the Food and Agricultural Organization, food inflation is going up. Number two, you have oil prices that OPEC is trying to raise deliberately by cutting output and creating artificial supplies. Number three, you have falling currency, the USD INR, which might just rise in 2021 as compared to falling in 2020. So the currency factor helping bullion. Now, I can see a lot of questions about what happens to cryptocurrencies, digital currency. Will it eat into the appreciation in bullion? A lot of money which was to have gone into bullion is supposedly and reportedly gone into high-flying cryptocurrencies, particularly Bitcoin. Now, does it mean that Bitcoin or cryptocurrencies or digital currencies of any other nature take away the crown of gold as God's own currency and currency of emperors and kings? I don't think so. You see, gold has a history of more than 5,000 years as being both a currency and a store of value. Look at how humanity has evolved over the last 5,000 years. From being the sole currency, humanity has found other means of transacting in goods and services. There were promissory notes, there were bills of exchanges, there are checks, there are negotiable instruments, there are credit cards, there is fiat currency, which means paper currency. And as you know, paper currency is not necessarily backed by gold, which means it is unbacked currency. You introduced all these paper assets, credit cards, plastic money, online transfers, etc., etc. Could you really dethrone gold as a best store of value and a defensive buy with scope for capital appreciation? Not at all. What really happened? Look at what happened to gold when it was trading at 225 to 227 around 9/11, which is September 2011. Where is it now? Cryptocurrencies have only gained more and more followers in that period, and yet gold and silver have appreciated. So cryptocurrencies, I don't think in the long run can harm gold, because if it was possible, then fiat currencies, negotiable instruments, checks, demand drafts, etc., etc., all would have dethroned gold by now, and paper currency would have been king. The other question is, can the governments, now remember the Russians are saying in 4 years we might have part transactions taking place in the ruble and part in the government sponsored digital currency. The Chinese are already using digital currency. Can digital currency curb inflation? And because Vijay Bhambwani says inflation rising means gold will rise, so can digital currencies curb inflation and therefore hammer down gold prices? I don't think so. And I give you my reasons why. There are 4 factors of production which a high school economics student of any good convent school will tell you. Now, the fact is that just because the government makes a direct transfer or a DBT, direct benefit transfer, by way of digital currency to your bank account or to your mobile phone, you may be able to buy food, shelter, and clothing. Not shelter, of course, but clothing. Maybe food and clothing you can afford with the money that the government is giving you in digital currency. But as long as the theory of four factors of production remains, more and more people rushing to buy the same commodities, which is food and clothing, will result in prices going higher. So digital currencies might solve the problem of hunger and malnourishment, but they cannot solve the problem of inflation. Inflation is a matter of demand and supply. Unless the supply of agricultural produces doubles and triples, which the Food and Agricultural Organization refuses it is. As a matter of fact, the global store and the global stock of pulses is at a multi-year low. And please go to the Food and Agricultural Organization's website. Don't take my word for it. This is, I remind you, of the United Nations organization. So food inflation cannot be solved. Other forms of inflation cannot be solved. Now I come to the WPI. So far we've talked about CPI, or consumer price inflation. Let's talk about WPI, which is wholesale price inflation. People are talking about a super cycle in commodities. Now, what are commodities? Commodities are raw materials for corporate India, for companies that use them as raw materials to produce finished goods. If you want a super cycle in commodities, and if you want aluminium, copper, lead, nickel, zinc prices to go up, which they are going, you would have seen, is it not common sense that raw material cost of corporates is going to go up? And therefore, the finished products of the goods that they will sell will also go up. Is it not common sense then that inflation will go up? And is it not common sense then that gold and silver will also go up? This is something that I want you to reason out with yourself. Don't listen to me. Don't listen to anybody else, but listen to yourself. Now, here again, I put up a post 2 or 3 days ago on my social media account saying the Chinese have been exporting deflation. By exporting deflation means they have been making cheap products and exporting their guts out and dumping it in the international export market. Now, people who are producing goods more expensive than China are shutting down their factories and importing Chinese goods, and thereby triggering unemployment and stagflation. But now the Chinese are finding that thanks to rampant currency printing, inflation in these metals, etc., are going up, and the Chinese are also raising prices. Now, this is a Bloomberg article not more than 72 hours old. The Chinese are now forced to raise prices of almost everything that they export. So WPI, or wholesale price inflation, and therefore raw material of the corporate India, is going to go up. And raw material costs going up means profit coming down. Which is why I think in 2021, there is a fair bit of probability. And remember, I'm using the word probability. Those of you who write stinkers in the comments, whenever I caution you about the equity markets, go ahead and have a field day. I still think you need to be careful with paper assets in 2021. Where do you think people will invest their money if equity prices were to correct? I think bullion, straight up, which is why you have seen a 400% hike in our imports. And remember, India is now, although dislodged from the number one position of importer and consumer of gold at a personal level, we are now at number 2, but we are a swing consumer. What India does impacts the price of gold and silver. And hey, the Indians are back. They are back in the bullion market, they are purchasing, and they will swing the prices of gold and silver. The other thing that I see a lot of questions about are how do you buy gold and how do you buy silver? What happens to interest rates if they were to go up? I'm going to tackle your questions one by one. Please bear with me. If interest rates were to go up, how much do you think the governments will allow these interest rates to go up? They'll probably go up by 0.25% or 0.5% or more. All right. So maybe debt instruments might just become a lot more commercially feasible as compared to gold. That is what your assumption is. That is what the assumption of a whole lot of analysts and experts is. But I want to ask you a question. If I was to suddenly get 0.5% more interest on my fixed deposit, but the inflation rises by 2%, what is the real effective interest rate? I'm not bothered about the headline rate. I'm not bothered about the coupon rate as advertised in the banks on their neon signs and on their billboards when you enter the bank premises. I'm more interested in net effective or real effective interest rate. Guess what? Most of the countries you will see which are offering you borderline positive yields on fixed income are actually negative yields once inflation is taken into account. And I am betting my money, and I'm betting the money of my company, and I'm willing to take a lot of flack from my company's shareholders by putting these bets in the market that inflation will rise in calendar year 2021. Remember, I'm not just an analyst. I am responsible for my company's funds. And when I talk about what I'm going to do in the market. So I don't know what you guys are going to do, but I'm going to bet my money, my company's money, of which I'm a major shareholder, by the way. I'm going to bet my money that inflation is going to go up and real effective interest rates will go even lower, even if the government is large-hearted enough to allow you higher interest rates. Which is why in 2021, it's a good hunting ground for gold and silver bulls. If you wait till 2022, I would feel that a lot of fiat currencies would have eroded a lot of their buying power. Remember, I told you, go and search Bianco Research. Unfortunately, YouTube does not allow me to share this PPT with you. And coming to one last thing, the velocity of money indicator as declared by the US Federal Reserve. Now, there can't be an authority about the US money and the US monetary policy than the US Federal Reserve. The velocity of money, which is the amount of money that changes hands from one citizen to the other, which means purchase of goods and services, and therefore business transactions. The velocity of money in the US is now almost at a half-century low. The poor are getting poorer, the rich are getting richer. The rich don't consume as much of necessities because they are fewer in number. The poor who would have consumed the larger number of necessities like food, shelter, and clothing are running out of money. The income disparity is rising. And this is not something that is very difficult to fathom out. If you just Google search income disparity or disequilibrium of wealth distribution in the world, you will get ample reports. Now, fewer and fewer people are controlling larger and larger amounts of global wealth. And therefore, you will see that the velocity of money is falling. Wealth is lying idle in the safety deposit vaults of fewer and fewer people, and therefore it is not going out there and changing hands. In such a scenario, when inflation is going up and people, when they want necessities, are not able to get them, I would suspect that there would also be some amount of law and order problems. Do you remember the Khabus riots? Khabus is a flat bread like tandoori naan in India. A few years ago, Khabus ran out in some Arab countries, starting from Egypt, because wheat ran out. There were actually riots for many, many days. Business shut down because of food riots when people could not get food to eat. Right? So, typically speaking, inflation is a breeding ground, and I expect inflation to go up. I don't expect digital currencies to dislodge gold and silver from the crowning place that they are at. And How do you buy gold and silver? Hey, I think there is nothing like physical investments in gold and silver. First of all, in India, you do not have the facility of ETFs or exchange traded funds in silver. So that rules out electronic forms of investing in silver in the first place. There are ETFs in gold. Sorry. There are ETFs available in gold. There are gold mutual funds, and then there are the sovereign guarantee bonds of the government of India. Now, I've been asked a lot of times as to why I favor physical gold and why not electronic form of holding gold, like say an ETF or a sovereign gold bond. I have nothing against ETFs. I have nothing against sovereign gold bonds. I have nothing against any electronic method of investing in bullion. I just have one question to ask you. Why do you want to invest in bullion? Invariably, a lot of people I meet, and we have a lot of animated discussion in my club, which I really enjoy, because here are some guys in a South Mumbai club, all of them fairly comfortable in life. Money is not really a problem. So when you're dealing with these guys and debating with them and having their opinion, you're talking to people who actually do things rather than just talk. That's an advantage. So when I have this conversation in my club bar or my club diner or something, and I ask them, why do you want to invest in gold? The answer is asset allocation and portfolio diversification. Hey, if you want to see portfolio diversification, you want to take your money out of paper assets, you actually want to go out there and invest in gold in paper form? Aren't you defeating the very purpose of asset diversification? I think so. I'm not saying that your investments in ETF are going to go down the tube tomorrow morning, or your investments in sovereign gold bonds are going to go down the tube tomorrow morning. Not at all. I have no problems at all. Remember, in the investing and trading world, everything that is of paramount importance is your comfort level, how you feel about it. If you're comfortable about investing all your money in SGB or the sovereign gold bond, or if you're investing your money in gold ETFs, all the more power to you. It's just that I'm just not comfortable, and I would therefore prefer to buy, if at all, I would prefer to buy in physical. Now, how about investing in stock mining silver and gold for companies like Vedanta or any other proxy plays? Now, this is an interesting question. I've been asked a lot of questions from both Indian and international investors about, should we actually go out there and buy companies, stocks, which are mining companies, which mine, which prospect for gold and silver, etc. That's an indirect way. That's like, instead of eating like this, you're basically eating like this. That's an indirect way of investing in gold and silver with a huge problem. Statistical beta. Statistical beta, let me de-jargonize this for you. Statistical beta means the absolute and pure price volatility. There used to be this company called Oil Country Tubular, and it used to have rigs, and it used to basically prospect for oil. Whenever they said, we think we are going to find oil, the company's stock would basically jump up into the skies, and whenever it was found that nothing of that sort ever came out, the stock would plunge. Ditto is the case for these gold and silver mining companies. They would go far higher than gold and silver appreciation and crash far more lower than the correction in gold and silver prices. So basically, you're taking a very poor proxy bet by investing in these companies. Somebody has written, if SGBs have a risk element, no other paper survives. I think you're mistaken here. I said that SGBs, I'm not comfortable from the point of view of holding my gold and silver. I did not say they are at risk. I just mentioned that your money is not going down the tube. Even in your ETFs, your gold Bs, etc., your money is safe. It is physically backed with gold, with physical gold. It's just that I'm old fashioned, and you are, of course, free to disagree. If I'm trusting the government by investing in sovereign bonds, which and other sovereign investments, which I'm a big fan of, I cannot be against SGBs or ETFs. It's just that asset diversification means that I hold some amount in physical. Ashutosh Singh asks, what if government default on SGBs as Russia has already defaulted on government bonds earlier? Ashutosh, to be very honest, this is a contentious issue. I did not want to mention it on social media. Nowadays, the atmosphere being what it is, this is an incorrect, politically incorrect thing to say, which is why I did not mention it. But the thought does come to one's mind. And therefore, I said physical gold. Although the Indian government has a very absolute, credible, clean track record of honoring its commitments, and I repeat, I do not expect defaults on any kind of bonds, which is why the Bhambwani family and Bhambwani Securities as a company invests in sovereign debts, sovereign debt schemes and sovereign debt paper with peace of mind. But this is a very, very good question that things can happen. For example, I was talking to a few friends in Australia. Now, if you're familiar with this, you would know what Perth Mint certificates are, PMCs. Now, here is a certificate which tells you that you're giving money to the government in Perth, and they are holding physical gold and silver for you, basically silver. Now, we were debating as to whether holding silver bars or holding Perth Mint certificates was a lot more comfy. Guess what? There were some people in the group who said PMCs or Perth Mint certificates are okay, but most of them said we would rather pay a little bit more and buy physical bars. That answers your question. Please suggest how do we buy physical bars without paying inflated prices on Amazon and Flipkart? Do not go to Amazon and Flipkart. Simple answer. I'll tell you what you should do. You should go to Zaveri Bazaar and find out prices from a couple of well-established jewelers. And once you take prices from these jewelry stores, go to government accredited refiners. Now, these are people who have their own smelters. In Hindustani language, it is called bhatti. They melt their own gold and silver and produce their own bars, which are then hallmarked and stamped with their own brand logo. Now, since these guys are wholesalers, the spread between the buy and sell price in physical coins, in physical bars, or what is known in Gujarati and Marwadi as lagdi, uneven bars and uneven coins, they are also stamped and hallmarked. It's just that you're not paying excessive making charges and therefore losing out on the making charge when you sell it back in the market to them. You will be surprised at what spreads you are being offered in gold in Zaveri Bazaar with good smelting firms who have their own bhattis or their own melting furnaces. 120 to 150 rupees on gold. That's all. Sometimes you will see a spread as big, if not bigger, on the MCX in the futures. My dear friends, if you apply your brains, there is nothing that you can't find a solution to. So when you're telling me that physical gold has its own problems in buying, etc., yes, if you don't look around, if you sit back in your chair and expect solutions to fall in your lap, nothing of that sort happens. Recently, somebody bought 4G Indian says, I recently bought digital gold on one of India's biggest UPI platform, but due to some security reasons, they blocked my account and I had a hard time with customer care team for over a month. There you go. Problem number 2. That also happens in many digital or cryptocurrency exchanges. People have forgotten their passwords and all their money has gone down the tubes. When there is physical coins or physical bars lying in your bank vault or in your home safe deposit vault, it's like a pillow under your head. You sleep better. And as long as you have made these payments with all your official sources of money, made check payments or credit card payments or online transfers, given your PAN card and Aadhaar card, you have valid bills for them. Believe me, you have nothing to worry about. It's peace of mind, and you can circumvent all these small problems about holding gold in digital or in any other form. Should you buy 22 carat or 24 carat gold? Good question. Simple answer. If you were to go to a smelter who has his own batti and he hallmarks even the uneven bars or lagdis that they sell to you, they give you, sir, 99.99% pure gold. Purity is what I trust, purity is what I pay for, and purity is what I will buy. 99.99%. Where silver bars are concerned, there is no such thing as 99.99 because that would make it very soft and malleable. So majority of your stamped bars will be 99.95%. I would caution you against going to banks for purchasing your gold coins and bars because their rates are absolutely customer unfriendly. They charge you the most, and as per the RBI, a bank can only sell you gold. They cannot buy it back from you. So even if you were to buy gold at say 30,000, and to your utter joy, if gold was to go to 1 lakh rupees, you can't sell it back to the bank because they'll tell you, hey, we can only sell, we can't buy. And when you go and try to sell that same gold in Zaveri Bazaar, the smelter will basically tell you, look, this has the stamp of SBI or Bank of Baroda or XYZ. I'll have to melt it and put my stamp here. So you're going to pay the making charges. So banks are not a good place to buy your gold from. What is responsible for 10% fall in gold price? This is a question from Sanjay Sharma. Like I said, Sanjay, the USD INR fell. There was a higher risk appetite in equity markets, which jumped up in the period after August 2020. And cryptocurrencies also went up. Therefore, people, they got a little more aggressive where riskier investments was concerned. In financial market parlance, this is called risk on. So there was a risk on in financial markets, which is why gold fell. And remember, in all my videos, I have been talking about gold as an investment. I've been giving you targets of first December 2021, then December 2022. No investment goes on a linear straight line path. There is always going to be volatility up and down. How do you invest in gold? My game plan is basically of 2 points. Very simple 2 points. Allocate at least 20% of your wealth in bullion. Point number 1. And point number 2, sit back, let time play its course out. Are you going to evade fiat currency purchasing power erosion? Are you going to evade inflation? Are you going to evade higher food and oil prices? No. It's all going to come and hit you. Is there going to be profit taking in the equity markets in 2021? Do you really think from say 5th of April 2021 to 31st December 2021, there is neither going to be a correction in equity in India or abroad? No. What happens then? Money gets recycled back to gold. Hari Krishnan says, do you still see correction in gold? While prices they cannot be ruled out from falling further. But like I said, since the last 2 weeks, Mr. Krishnan, I am seeing that the slowdown is, the decline is either slowing down or it is showing signs of reversing and forming a plateau. Remember, a bottom formation or a top formation process is a time consuming one. It need not be, it's not that on Friday the bearishness ended and on Monday bullishness starts. It's not so cut and dried. It takes a little bit of time. Please stay with it. Can gold hit below 40,000 in 2021? It's Mr. Surya's question. I hope it does so I can buy some more. That is what my answer is. Should you insist on a certificate after purchasing gold, or should you basically trust the dealer? Well, there are two things you must do when you buy gold from a smelter or your friendly neighborhood jeweler, etc. First of all, see to it that the gold is hallmarked. It is stamped by the dealer, or if he is a sub dealer, by the primary dealer's logo and the purity on the bar or the coin that you are buying. Secondly, insist on a certificate, a hallmark certificate, which tells you that the gold or silver is of XYZ purity. If you really want more sleep at night, peace of mind, there is something called an electronic testing facility, which is there in all bullion markets across the world. In any city you go, you can just walk into an electronic testing facility. These are independent testing houses. They charge you a very small fee, less than the price of a masala dosa that you eat on a roadside. You just put that gold or silver in the machine. It's basically tested electronically for purity, and a certificate is given to you. Believe me, the cost of a masala dosa buys you peace of mind. You sleep better. Get it electronically tested after you get a hallmark certificate and the physical gold bar or silver bar or whatever stamped by the jeweler. AJ asks the question, is it possible silver will spike? I'm actually betting my money, AJ, that silver will spike. You cannot have 5G telecom without silver, because silver is the best conductor of electricity and electromagnetic pulse. You cannot have Internet of Things. You cannot have solar power without silver. And now that electric vehicles are coming, you cannot have electric vehicles because they will have a huge amount of circuitry, and a minimum of 55 grams of silver goes in each electric vehicle. What will be the impact of Basel III? Now, this is a question by Mr. Venkatesh R. Basel III basically is a norm where the cushion or the capital adequacy ratio maintained by banks is likely to be raised higher, so that the banks have more liquidity lying with them, so that they can cope up with financial crisis as and when required. Mr. Raghuram Rajan was one of the many people who have formulated some of these Basel III proposals. And when they do come into place, capital adequacy norms of banks will go up. Therefore, banks will be required to maintain higher amount of deposits, which means lesser liquidity in the financial system. Initially, you might see a little bit of contraction in the M3 money supply, which means the amount of money lying around or being traded around in the absolute economy. But over a period of time, it will basically correct itself. Can you go for investments in gold and silver instead of PPF as interest rate goes down? This is a question from Shubham Jain. Shubham, as a child, I always had a problem. I loved ice cream and jelly. So whenever my mother asked me, do you want ice cream or jelly? I used to answer both. So what would I invest in? Would I invest in PPF or would I invest in gold and silver? So this is a question you're asking a hungry child like me. Would you want ice cream or would you want jelly? I want both. Both are different issues. Do you know the wonderful instrument that PPF is? It is EEE, exempt, 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 and under section 80C. Basically, even if the interest rate was to go down as it was proposed earlier and then reversed, do remember this is tax-free. And you're lending money to the government of India. All right. As a matter of fact, one of the first things that I do at the beginning of the financial year is pay all my insurance policy premiums, put money into the PPF account, pay as many utility bills as far as possible. And then when I have the liquidity and peace of mind that I've done my job for my family, then I start trading in the markets. So I hope that answers your question whether you should take PPF or bullion. Take both. Shrey Sethi asks how to invest in silver in digital form. Unfortunately, no ETFs, etc. Nothing doing. You'll have to buy physical. Sanjay Sharma, do you think international banks have been rigging the price of gold? I don't have any doubt about it at all. The prices of international prices of gold and silver have been artificially hammered so that, like I told you, the international commodity markets, the invoicing currency is the dollar, and wherever people are buying in various locations, say in England, people will buy in the pound sterling. Now, if gold and silver were to rise, their currency will fall, which will result in inflation. Which is why international bankers do not want gold and silver prices to go up, because the currencies will fall. So definitely, yes, international banks do have a hand in subduing the price of gold and silver. Kush Rastogi asks, could cryptocurrency replace gold? Kush, I think I've already answered this question, that cryptocurrencies may be able to solve some of your problems of malnourishment, poverty, etc. But it is like saying kerosene will replace diesel or natural gas will replace deodorant. I don't think that's likely. Pradeep Kalra is asking, is the dollar going to crash? Well, crash is a very, very aggressive term here. For the moment, I think the dollar is in a bullish kind of a groove right now. But over a period of time, like I discussed earlier, it might just lose more ground as a sole international reserve currency, because you have the euro, you have the renminbi, you have the Japanese yen breathing down its neck fairly hard. And older guys like me have seen a lot of ups and downs. The new generation, the millennials who have come into the market, you guys are lucky. You're getting the window seats to financial history being made. Number one, you're seeing the US dollar slowly but surely losing its number one position as a reserve currency. It's still number one, but it's losing ground. Number two, you're seeing Brexit. Now, what will it impact gold, silver, and other industrial metals as? Now, the London Bullion Merchants Association declares the price of gold twice a day. It's called the AM fix and the PM fix, morning fix and the evening fix. Now, as Brexit is basically gaining traction, the British are out. And at 2:30 p.m., the London Metals Exchange announces inventories of industrial metals. That is lead, copper, aluminium, etc., zinc, etc. Now, prices across the world fluctuate based on the LME inventory data. Now, there will be a disconnect between the LME announcement and the morning and evening gold fix from England, which is why volatility will go up even more. And the more the volatility goes up, the more defensive buying you will see in gold and silver. Lambit Kamar asks whether gold and silver in this financial year, which will be better? Which one would I bet for? This is a difficult question. In terms of percentage appreciation, I would say silver has a better chance of appreciation for the simple reason that it's going to go in the Internet of Things, 5G, solar power, electric vehicles. All right. But silver is at least 30 to 35% more volatile than gold. So it could jump absolutely high one day and fall absolutely low the next. If you have the strength in your nerves, if you can bear that volatility, I would say silver. If you want a little bit more peace and quiet in your investment journey, but you are willing to sacrifice return on investment slightly, then it is gold. Your risk appetite is something I cannot decide for you. So it is a question that you must answer yourself. Which level do you think is good to enter gold? Unfortunately, I can't really give you a buy or sell level and target as per Equitymaster's uh, compliance on social media where their norms are concerned. But believe me, if you were to do an SIP even now, I think you're going to be better off. Now, here is a question from Ram1336. Now, I frankly wouldn't have asked, I wouldn't have mentioned it myself, but it's a good thing that somebody has asked this question. Ram1336 says, so, sir, do you think the US government will confiscate gold if price increases as it happened in the past? Ram, like I said, there are some things one cannot say in the public domain, but now since you've said it, I'm only answering the question, so nobody can hold anything against me, I hope. After the Great Depression of 1929, the US government did pass a law where holding physical bullion and especially physical silver was made illegal beyond a point. Remember, at that point in time, your ETFs and gold bonds, etc., did not exist. Okay. Now, whenever I make videos for Equitymaster on bullion, I'm overjoyed to hear so many of my overseas viewers come out and comment in the comment section. Vijay, I love it when you say buy physical bullion because everything else is a promissory note. It is a promise that they will pay you in bullion. What is an ETF? It's a promise that you will be paid in bullion. What is a SGB? It's a promise that you will get your bullion. But what is a gold coin? It is a gold coin lying in your vault. So I'm not saying that the government will confiscate your gold, but if push comes to shove in the US, what do you think they'll confiscate first? The paper gold, because that's already lying in your demat account. It's just a paper entry, right? Physical gold will be confiscated later. Shubham Mandal says, can gold standard come back? I think it's very difficult for the gold standard to come back because if the gold standard was to come in, you would basically have to see a lot of devaluation of fiat currencies. All right. And if the physical currency was to devalue, because a lot of currency that is printed, for example, 20% of all the dollars that are floating around in the global markets were printed in 2020 alone. Can you imagine? 1 out of $5 in the global financial markets was printed in 2020. Obviously, it is unbacked by gold. If you were to bring in gold standard back, you will have to destroy all these dollars. So that will hit a lot of people. I don't think the gold standard is coming back. So we'll have to depend on paper currency, which is actually worth whatever you want to make worth out of it. Nitin Verma asks, how much silver is allowed in a family? Like 250 grams family gold. Nitin, I'm very glad you asked me this question. Now, there is a lot of misconception in the minds of people as to how much gold or silver an Indian can hold. As per the Income Tax Act and as per the announcement on 1st of December 2016, that a married woman above the age of 18 can hold 500 grams of gold, and unmarried woman above the age of 18 can hold 250 grams of gold, and a male over the age of 18, irrespective of whether he is a bachelor or a married man, can hold only 100 grams of gold. Now, people think that this is an absolute ceiling. It is not an absolute ceiling. This is the amount of gold that you can hold without having bills or without having proof of purchase as ancestral gold. And if you are to go out there and make fresh purchases, showing your Aadhaar card, your PAN card, and making payments by official means of money, by check, electronic transfer, or credit card, you maintain those bills and disclose this bullion investments in your books of accounts, you can hold all the gold and silver that you want. But please do confirm with a chartered accountant about the norms and about how physical investments in bullion are also allowed inflation indexing over a period of the long term investment cycle. Tom is asking, what is a better investment, cryptocurrency or precious metals? Tom, I don't understand cryptocurrency. You are talking to an ignoramus. I do not pretend to be an expert on crypto. I will therefore go where I'm familiar with. And I'm familiar with bullion, and therefore I would prefer to go with bullion. It is okay if I was to miss out on the appreciation that Bitcoin, Ethereum, and other Doge coins, etc., are giving. That's fine with me. Prashant Agarwal is asking, can oil prices hit $100 a barrel? Prashant, a couple of weeks ago, I did a show on CNBC TV 18 in their commodity segment. And I answered this question that from my point of view, and I reserve the right to go wrong, but I'm fairly convinced that I'm right. From my point of view, this $100 a barrel is kite flying. For taking crude oil prices to $100 a barrel, you would have to go back to 2014 levels where alternate sources of energy, especially electric vehicles, hydrogen powered vehicles, solar powered vehicles, solar energy, etc., were not providing so much of a competition to fossil fuels. Number one. Number two, the way oil prices are being controlled and brought higher, it is out of creating artificial supplies by cutting output rather than the buyers banging on the doors of OPEC and saying, please give me a few barrels of oil more. The world is bathing in oil. There is a lot of surplus oil. Countries like Guyana, countries like Turkey, countries like Iran, etc., have made new discoveries. They are willing to sell. And if they are not allowed to sell, they will sell it in the unofficial market and bring down prices. The only reason why oil prices are going up is because Saudi Aramco wants to float another public issue. And before the public issue, they will jack up the price of oil. After the public issue, it will fall again, just as it did after the first public issue in December 2019. Samir Bhatia asks, is investment in silver on the MCX a viable option for common investors? Samir, the problem is delivery is very difficult on exchanges. I would suggest you basically go to Zaveri Bazaar and buy from a smelter or a wholesaler who has his or her own bhatti. Friends, I think we have time for answering maybe two, maybe three more questions before we need to call it a day. And I do suggest you sign up with the link that you're going to get to sign up for and get your gold guide for free from Equitymaster. And feel free to basically touch base through the customer support queries and get in touch with me. So I'm going to answer the last two or three questions to the best of my abilities. If anybody is left out there, you can always send your queries by email. With electric vehicles coming up, this is a question from Mr. Sasikant. What is your long-term view on oil marketing companies? I live at Breach Candy, where there was a signature department store called Benza. It used to sell high fashion garments. Once the lockdown was announced, it is now selling foods. Oil marketing companies will have to reinvent themselves and not just sell oil, but after electric vehicles come, they will have to diversify Either they will reorient themselves or they will perish. That's the only choice they have. Sahir Sachdev asks, why are there no silver ETFs in India? Unfortunately, that's a question that only SEBI can answer. Whenever I have met people from the multi-commodity exchange, where I used to be a consulting trainer between 2005 and 2009, whenever I meet them at public get-togethers or whatever, they still tell me that SEBI is still not decided as to whether they want to allow silver ETFs or not. So it's a regulatory question. I can't answer that for you. Jiva Lakshmi Narayan is asking, are diamonds worth investing? Now, this is a very pertinent question. And when I used to be a regular on ET Now in a show called Hot Commodities, a lot of people used to ask me whether they should invest in diamonds as a long-term investment, as a diversification from their gold and silver. Frankly, my answer is no. It's not because diamonds are not going to appreciate, but it's the way the bid and offer spreads are in the diamond market. There is something called a Rappaport rate. Call it a reference rate for easier understanding. Now, when you go out there and buy diamonds, you will be given a Rappaport rate plus a premium. And when you try to sell your diamonds, you will be told Rappaport rate minus a discount. Try buying a diamond, even certified diamonds. Try buying a diamond on Monday and selling it on the immediate following Tuesday. See the difference and see the loss that you're going to make in the bid and offer spread. This is exactly the problem with even platinum in India. I'm not talking about overseas markets, but in India. The bid and offer spread between 1 bar of platinum, the purchase and sale price difference between 1 bar of platinum can be 30%. So this 30% is a spread that the distributor is taking away from me. Similarly, the spread between diamond buying and selling in the Rappaport rate system is too aggressive. I think you will buy diamonds as an investment. Your grandchildren will bear the fruit of this investment. You're not going to see too much money in your lifetime. Aradhya Agarwal says gold increasing debt. Government is increasing debt and fiscal deficit is going up, which is dangerous, but the government can confiscate gold. Now, these are some things that have come up in the social media and the mainstream news channels about various governments the world over thinking of confiscating citizens' gold or whatnot. Or there have been suggestions by some experts about how excessive gold should be mopped up. I don't think that's happening in a hurry. And if you have valid bills of purchases, etc., I don't think you have anything to worry about. And even if you're staying within, like I said, 500 grams, 250 grams, and 100 grams limitations as specified by the IT code, you have nothing to worry so far. But of course, tomorrow is always a question mark. Nobody's seen tomorrow. We can't say for sure. But if you're going to live like this under such constant fear, this is no way to live life at all. What will be the impact of electric vehicles on the future of gold price? Oil would not be used, inflation would fall, and so will gold fall. I'm afraid this is the last question that I will be able to take on this live stream. So you're right that consumption of oil will fall. About that, there is no doubt. But then do remember that currency printing, for example, 20% of all dollars floating around in the market are printed in 2020, and these are unbacked. Inflation is not only dependent on oil. There are various types of inflation. And CPI, WPI, inflation can be of various hues. You can't just say just because oil is going to go away, all other energy sources are going to be free of cost. It's not happening. As long as there is capitalism and there's a world order, there will always be a cost assigned to things. Sure enough, the cost of running vehicles on electric power may be lower than fossil fuels, but it's not for free, and inflation in other forms will always exist. And remember, human population is rising, so as demand rises for goods and services, so will prices. Inflation is not something that's going away in a hurry, so don't worry about the inflation part about gold. Friends, I think we need to draw to a close here. Sorry for that. I think we are going to have to call this a day. Like I suggested, please do sign up for the free gold guide and subscribe to my channel on Equitymaster. In the comment section on this video when it is uploaded, please do let me know what you think of this live chat, and let me know what you would want me to record next in my videos to help your investment and trading experience and even better and richer one in nature. Subscribe to this YouTube channel. Click on the bell icon to receive alerts about fresh videos whenever they are uploaded here, and help me reach out to like-minded investors and traders who believe in knowledge-based investments and trading by referring my channel and videos to your family and friends. I wish you have a very, very profitable year ahead. Keep watching these videos. Keep connecting with me. Goodbye for now. And thank you for joining me in this very exciting maiden live stream on YouTube of Equitymaster. Thank you. Take care and bye-bye.